Hello everyone. I wanted to do an in-depth previous week recap by looking at all the market maker sell and buy models that we had during the 9:30 and 11 a.m. Morning session to see what we could have done and what we missed, and all my trade recaps that I already posted. So we'll go through those as well. So before starting the session, just look at the delivery of this week. This is Monday through Friday, and as you can see, this Friday we set a new high, all-time high at this price. But before this Monday we had already a previous week high, a previous week low, and this is the gap that we had when the week opened. So what I would do is I would start a market replay over here about here, yeah, because that is when mostly I come on the charts to see what is happening. So let's look at the charts. Here we had a daily SMT with ES, and I want to go and up until 8 a.m. 8 a.m. Okay, so by this time I'm anticipating higher prices towards this high because we have already taken these relative equal lows over here, hitting this low, and we had a break of structure over here, low high higher low higher high, which makes this a mitigation block with a fair value gap. So what we would do is we will note this fair value gap, and we would see what happens when price come to this level again during our opening time. So let's go down to a 1 minute chart, because that's what I do exactly right after I have my 1 hour analysis complete. So this is the, let's go back to 1 hour one more time. I think I want to enable this when I go to 1 hour chart. Yeah, okay. So here, as you can see, this is the fair value gap over here, and I want to look for shorts toward this open again before we can go up again there, or let's see what happens at 9:30 open. So we are consolidating before the 9:30 opens, we go up. 9:30 opened here, we went up through this. Let's go to 1 hour chart. We have this high over here that we will note, and we are in our BC of interest. Let's see what happens. Okay, we tap it with a big rejection. We take out all this accumulation, big rejection from this wick. We should not go more than this consequent encroachment of this wick and see a rejection. Okay, we saw a rejection. Now what I want to do here is that I want to go down to a 30-second chart to see what happened. Okay, we broke down here, we took support from here, and this is the inverse fair value gap, and I would like the price to not go above this up close candle in good scenarios. And let's say this would be our trade on this fair value gap, stop above this high, targeting what? This fair value gap that I noted before, which aligns with the weekly open. Let's see what happens. We went there, okay, we didn't get stopped out. That is good. We went into this auto block, And let's see what okay, so price rushed down there. So this is just something that I wanted to point out to 9:30 opening trade, which is technically the ones that I don't take. My point of interest is this guy and the new high that is created over here. So what I want to do here is, if I'm bullish for the day. I remember I was bullish on Monday. So what I want to do is I want it to go down to this fair value gap, which is my point of interest during 950 and 10 950 and 1010, and I want to see a smart money reversal at this point. So let's see what happens. Okay, we see a smart money reversal in this point, which is where I wanted to enter over here. If you see, we made an SMT, low, high, lower, low, higher, high, which makes this a mitigation block. What we could have done is we could have targeted 50% of this, which would be already the area we are in. On this day, I took this trade. Like this. I entered here when this candle closed, and my target was this, which did not get hit, and I was stopped out. I think my stop was below this. Let's see. I think I brought my stop up here, and I was stopped out in the, what do you call it, in profit. But the idea was that I wanted to see a smart money reversal here, which we did. And then I remember that I put my stop somewhere here and I got stopped out. And we end up reaching that high. This is a perfect example of how we should trade. Look for our point of interest during our time of interest, during a macro, targeting the previous high, which was, honestly, if we were in a 15-second chart over here, we could have seen this earlier. You see low, high, lower low, higher high, which would make this as my entry over here. And what I can do is I can take a long as soon as we went up this place, put my stop below here, target this 100 points straight easy in 30 minutes. So this is a beautiful example of MMBM on Monday. And what we can do is we can write it down over here. 9:30 manipulation. Point of interest, 1 hour FVG. Break of structure. Small SM, I'm just gonna write SMR. This is perfect. So what I'm gonna do is I'm gonna save this as a example in my journal for future purposes, you know. I actually took a small trade on that day with $60 profit for some reason. Yeah, I got stopped out as I told you. All right, this was a beautiful day. Let's go to the hourly chart and see what happened. Look at this. I was bullish. I was looking for a reversal over here, and we did end up going up there. Beautiful. Let's copy this as well. Now clear this. Now let's go to the next day. Now whenever we go to the next day, so in the PM session or at night, we had a big expansion. I took out the previous week high. So we can see support. This is our previous week high now. So we can see a rejection from there. Previous day high, sorry, and this is our previous day low over here, which we need to note unless one of them is taken out. So what we can do is we go until 8 a.m. Okay, we took out the previous day high, put a new high in at 200. This is 9 open. Let me go back one more time and see what is happening. So we took out the previous day high, made a new high. So I'm clearly at this point bearish because we took out all these highs. There's no things on the left side of the chart to look at. So when we take the high, we want to go towards the internal liquidity, which is this fair value gap, the first fair value gap that is prominent to us with a order block, and which would make this place my drawn liquidity, the one I noted, and this would be my point of interest. So what I would do is I would go down into a 1 minute chart, and what I want to see is I want to see a reversal from here. Wait for 9:30. Before 9:30 we see price going up again, and 9:30 opens. We took out the previous cycle high, these ones. We have an SMT with them, and now I don't want the price to go above this high, and I would enter because we have already made a reversal over here. I want the price to go below. Let's go to 30-second and see what happened. So on a 30-second chart, we took out the high, we made a low, which make this guy a big resistance to price now, hopefully. This guy, this down close candle is a big resistance. Let's note this down actually. Then this down close candle, let's note down our area of resistance. This down close candle. What we can do is we can target these lows over here, hopefully previous day low or the opening. I entered above the 930, putting my stop above that high, protected high, and we target the open over here. Let's see how it plays out. We actually see a big dump, take out the previous lows. Now because we are bearish, I don't want the price to go too much up, right? I don't want the price to go too much up. and we did not. We actually stopped in the 50% of this price range, and now we have a new range, which is from this to this. Mind you, we would have already partialed on this low over here. So what is happening on the we still haven't reached the open yet, so we can expect lower prices. But at this point I'm already out because my stop would have been hit over here, but I already took big partials over here. We actually end up taking this. Oh, we actually did not. So we saw a lot of consolidation, guys. Okay, so let's look at this delivery over here and refine our entries. 9:30 open manipulation with SMT. Target the previous cycle low. Let me put this here because I want to see that 9:30. Let's suppose we target the previous cycle low, which is 65 points over here. So my resistance on price would be low, high, low, high, low, low, which would make this low candle as a breaker block, and we could have entered on this candle, which we did when the price went up, and this would be our break of structure over here. And then we also see that this break of structure happened right next to this fair value gap, which is good to note because this is what I want to see. To cut this high over here, and then break of structure, target the previous cycle low. This can be one example of the 9:30 opening. Let me copy image here. I actually lost that day. And let's look at our macro window and see what we could have done over the micro time. So we had made this low over here, right? The previous cycle low. And when the new cycle opened right about here, so this is our macro window, which we look for. Okay. Let me put it here. We saw smart money reversal. How? We see this fair value gap as support in price. Rejection. Go down, which would make this high candle, the highest body candle, this one, the mitigation block, right? And what I can do is when we go above it, I can just enter. I can just enter at this place, put my stop below the protected low, which is because of the SMT. And what I can do, I can target the previous highs or even 930, which we never hit at the moment. So the first target is always the previous high, which is these easy highs over here, or this order block over here. So what we could have done is this. Break of structure. Let me point that out as well over here. Break of structure. SMR with previous cycle liquidity purge. Okay, beautiful. So I can just copy this image and save it as well. Now let's go to the hourly chart and save that as well. So this was the nearest trivial gap. We should have made that over drawn liquidity. Anyways, copy this image to save for future purposes. Let's go to Wednesday. So we took out the previous day high. I removed it. We took out this level, but I'll keep it here. Took out the previous week high. Let's keep it there and go to the next day. We actually end up going down there to the open, and then we have a new day open. So at this point, we have a break of structure over here. What is this time? Oh, we already went down there. At this point, we already have a break of structure. So what we can do is we can note these fairly gaps over here as over 7 a.m. 8 a.m. So 8 a.m. we are already in that fair value gap when we come. So what I would do at this point is I would want to see a smart money reversal here towards the previous low that is over here, or towards this first. This is my first target. So let's see what happens. Now I didn't cheat. I accidentally pressed forward too many times. So we are in that 1 hour high over there. Let me disable this. Is not helping me. Okay, this is the 1 hour CB that we were talking about, and I want to wait for the I'll go to 30-second chart, and I want to wait for the 930 open. Okay, we are consolidating, and 930 opens, taking out the previous cycles, right? At this point, I would like to enter, put my stop above these guys. What happened? Can we go down to a 15-second chart? Yeah. Normally, I look at the 15-second chart as well on the side to see what is happening. So what we could have done is that since we are already here, we want to see a smart mid reversal, which would be an SMT inside a point of interest. This is our entry. When we close below here, we can enter short over here, stop above this, but let's see if it goes up. Yeah, it just go up like until here. Why here? Because this is the previous cycle low, could have acted as a strong resistance over here, which could have given us a better entry. Again, you could have entered here, 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 wherever. If, for example, you saw that this Persian revert, you could have entered even on this candle when we disrespected this fair value gap over here. Like this candle close and you're like, okay, I'm gonna enter. So what we target this open. We are very bearish already, so we could have targeted this 2300 level. Let's just do that. Let's target this 2300 level and see how the price goes. Okay, first target hit. Oh my god, that was a lot of manipulation. Okay, second target hit. So at this point, what I want to do is I want to note this down as a separate example, and then let me write these things down which are important. Let me copy this for Wednesday, right? This is Wednesday. Now at this point, when we take out the very important liquidity levels, I want to go back to 1 hour chart and see what is happening. We made a 90-minute SMT with ES over here, and we are inside this area over here. Want to go down to a low chart and see any signs of smart money reversal in this, and I want to see if we want to do a continuation or we are in this fair value gap as well. We want to be bullish still or we want to be bearish. So let's see. We will note out our macro window over here, 10:15, and see what happens. 30-second chart. Okay, so okay, we have a new cycle open, new candle open. Let's see what happens. We take out the previous cycle low. Okay, we make a break of structure over here. Could we have entered over here? Let's see. Let's try to enter over here, put a blow over here, target the first high that we see over here. Okay, Did we take out that high? Ooh, that is a painful trade. Okay, we did take out that high. We took out that high. That would be a hard trade to do, honestly. So because we're bearish, we can only expect high resistance liquidity run over here towards 50% of the range probably, and then see more lower prices probably. So let's see, where did the price go? Goes up to 50% and it goes down, hopefully, if we are right. It actually did not. It's just, oh, it did. Oh, see, we took out that. Oh, that is crazy. I wouldn't be on the charts by this time, so let's just talk about this area. So this is our macro time. This is the mostly the time where I trade. Macro time, break of structure. Let's go down to a 15-second chart. If you could have caught a better entry, yeah, we could have caught a better entry over here, over this place. Low, high, lower high, higher high, break of structure with the mitigation block. I could have entered over this guy over here. This is the candle that purged the liquidity. You could argue that we could have entered on this guy, targeting these highs over here. And this would have been an amazing trade if we have done it like that, but it's too much back and forth. Until 10:30, we entered at 10:08, which is not that bad. So let's point that out as well. Let's go to the hourly chart, see what is happening over there. So it's two small trades, honestly. One from here and one from here. Let's take a snapshot of this thing as well. Let's go to Thursday. So we'll be careful not to go too much forward. 7, 8. Okay, so on Thursday, we actually took this low, made a break of structure over here. So at this point, what we did was we took support on this. We took support on this Free Willy gap, went up, disrespect this Free Willy gap, made an SMT here, and we can argue that we can target this high over here. Let's see if we have any SMT with ES over here. And let's go down to I really want to, my bias is neutral here, honestly. Let's point this out over here and see what the market do when the 9:30 opens. I want to short these relative equal lows over here, and let's see what the market do. They're too clean to be left out. Oh, market is already coming down. So at these are the places where I want to look at the candles, what is happening. So right before 9:30, we are already going down, which means that I'm not sure. We close this fair value gap, which means that I want to see a purge of these guys and go up again, or maybe go down more. Okay, we are in that fair value gap that it was my point of interest. We are consolidating, break of structure. Let's go down to a 30-second chart. This would be our entry over here. Since I am not sure about the bias, what I would do is I would point this and this out and target 50%. Now, since we made a fair value gap over here, I would enter here. And target this, maybe more than this, no, just this side, small trade, and see what happens. Okay, so we took out these lows over here, these relative equal lows, which made a smart money reversal over here at 9:30 and went up there. So this would have been an amazing 60-point trade over here. At this point, we are at my time of interest, right? We took out the high over here and we are in time of interest, and I want to see a smart money reversal over here. If we are, I want to see this taken again one more time, or made an SMT at least. Okay, not yet. This next candle open, I wanted to take it. This was immediate rebalance, so I think we are bullish. So we have a smart money reversal over here. I wanted to go close above. Yes, I can enter a long position over here, put my stop over here, and target the even level 200. See what happens. We got stopped out. We come back. Bad trade. And what I want to do here is that I want to place this here. I want to see I want to enter again because I'm pretty bullish on this now, and I want to see it tap somewhere into the 50% and just enter based on my intuition, making a 20-point stop towards that 200 level, because at this point we already rebalanced. We do not want to go down more. Okay, we see it go up. Okay, this is good. So we had two really good opportunities which presented itself on the longs on this day. First of all, let's point this out. Purge of previous equal lows, as you can see over here. Smart money reversal. Break of structure. Cycle high. take a picture of this guy. Close this, and then second entry can be the one that we just anticipated over here. You take out these lows, as you can see over here. With a beautiful fair value gap. Yeah. Let's take a picture of this example as well, because this rarely happens. Like, I mean, it happens, but for me, I never really trade these. So Thursday, I would have lost it. Let's look at Friday now. New day opens. We took out the previous day high as soon as the day opened. I think I did it more again. This is 7 a.m. This is 8 a.m. Yes. Okay, we already took out the previous day high. So clearly our target is previous day low. Or these levels over here. 200 probably would be our first level. So we are in our point of interest at this point. So if I want to short, I want to short above this 0 over here, which we will know at 9:30 open. 9:30 open would probably go up there. Let's see. See, 9:30, before 9:30 we are up there. So I would go down to a 30-minute chart, 30-second chart. We have a break of structure already, and before 9:30 opens, we go up again, taking out the previous liquidities that we have made over here. Oh wow, thank God I waited for it, because I want to short. Okay, we made a very big wick over here, setting up a new high of the year. Nice. During these positions, I want to see what happened. So we already made a inverse fair value gap over here where we can short at this point. And I said I want to short above the open over here. Protected stop, targeting the rounded figure level over here, and so I can target this because with the volatility it looks like it will go down with speed. We got taken out. Did we? No, we did not. Okay. My time of interest has come. So our trade is still on over here. My time of interest is here, and during this time of interest, I want to see a reversal between this area. Okay, we made an SMT. Oh my God. Okay. We broke down aggressively over here. Break of structure. What if we have entered over this place? Placed our stop above this eye, targeting this low over here. No, we did not get stopped out. Okay, this trade would have been done by now. By 10:26, we are done. Beautiful. Let's look at both of these trades. Since we have no upside target and we have already taken out the previous highs, we have made a new high over here. I would like to short this, honestly. So how I would short is this. The first frivilly gap that we made over here would be our first entry, but I wouldn't say it's realistic because I wouldn't be entering over here, honestly. I would be entering somewhere here, which is more realistic to me because this is my time of trade. So let's just take an example of this. We made a high, we made a low, we made a lower high, we made a lower low. Now at this point, I would frame my entry on this what do you call this? This lowest down close candle over here. Because most of the time price comes back to it, which it did, as you can see over here. Sure, I would lose heart over here that I missed the trade. But let's see, yes, it filled us stop above this because this is a smart money reversal and the price will never go above it. Targeting what? Targeting the first round figure over here. This would be our trade. And then our first target and then the second target. This is a more realistic trade, which I could have taken on Friday, but I was not on charts on Friday, so I did not trade on that day. Frankly speaking, here I would have entered on this guy over here, putting a 26-point stop. My stop would probably be here because I mostly put my stop on a 3-candle formation like this. I put my stop on the highest candle most of the time. More realistic entry. More realistic stop. A realistic target. Perfect. So what we can target here, what we can see is we see a smart money reversal during a macro. Let's point out the macro over here. It always happens in a macro, but it's like sometimes it's really hard to see, right? This is a smart money reversal. Okay. break of structure over here. We saw our break of structure over here on a 15-second chart. SMR. Let's copy this. Oops. Honestly, I see nothing else other than this on this day. Yeah, that's it. This was a difficult day to trade. Someone would have been stopped out over this. Beautiful. 1 hour. So let's see where we went on that day. Okay, we just came back and today we opened over here. Okay, this was a long session. Even I'm tired. So we'll talk about it later. Thank you.